Hello and welcome back to The Note, coming to you from New York, which I can report is still extremely cold. Now, we can't say that of the financial markets. They've just dodged a bullet from Greece, but you haven't seen any great relief rally there. The situation has been booted forward for another 4 months. Bond and stock investors generally know their game theory, expected that you would get some kind of a resolution along those lines. As a result, the Nasdaq Composite here in the US and the FTSE 100 in the UK remain just below the all-time highs they set right back in the dot-com boom era. For now, what will probably determine whether they can actually get back above that level will be the testimony from Janet Yellen, which was once known as the Humphrey Hawkins testimony, that we will be getting tomorrow when she speaks to Congress. It's always been a great opportunity for the chair of the Fed to signal shifts in monetary policy, shifts in emphasis, and at the moment, with great dissension over whether we really are going to be getting a rate rise from the Fed later this year, it will be particularly important. Now, what we're showing you here is largely the case against a rate rise. In the last 6 months or so, you've seen a very great strengthening of the dollar, which effectively tightens monetary conditions, does some of the job of a rate rise for the Fed, while you've also seen a fall in inflation expectations, which again removes the need for a rate rise. But in the last few weeks, thanks largely to the end of the free fall for oil and a slight recovery in oil prices, those trends have at least stopped and maybe very slightly begun to reverse. That will strengthen the case for a rate rise. Perhaps the most critical thing that we need to listen out for from Janet Yellen is how much emphasis she puts on the labour market. As you can see, if you look at inflation, there's still not much of a case for a rate rise. If you look at the labour market, there are plenty of arguments, depending on which indicators you use, that we're getting to the point where the US economy will run out of slack and where it will become dangerous to leave monetary policy this loose for much longer if you want to avoid inflation. So perhaps the critical point to listen to from Janet Yellen is exactly how much emphasis is she going to put on the labour market now that some of those other factors look as though they will allow a rate rise later this year.